Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 9th of June, 2020. What we're looking at here is a lot of red on the screen. This is our visualize. If you're kind of curious, if you're an intraday or swing trader, these are all the stocks in the S&P 500. That's what makes up the advanced decline line, which are stocks that are positive or advancing on the session, minus those that are negative or declining on the session. At the end of the day, the advanced decline line was almost negative 400, which means most stocks, if not just about all of them, were negative on the session. But something weird happened today. The Nasdaq and the financial or the technology sector, XLK, both made new highs. In the case of the Nasdaq, it's not evident right here on the future screen, but that popped above 10,000. So the Nasdaq index itself made a print that stayed up there for a little bit beyond the 10,000 mark. And that's in large part because of some leading names and big market cap names. So there's a couple of ways to think about this. In short-term trading or maybe even swing trading, it's good to look at the market cap. So the one way to do that is look at these little bubbles or the boxes or squares, and they represent market capitalization. So Amazon right here has almost 1.3 trillion, so technically 1.3 million market cap in value, and that's essentially 1.3 trillion. Apple right here has 1.49, so basically 1.5 trillion, and the squares go by size. Picking a random company, SL Green Partnership, and maybe here Health Peak Properties, that market cap is about 15,000 million, so essentially $15 billion. And that's why the market itself, actually might get a better picture looking at the Nasdaq 100. So see all these small cap names, they essentially fit inside the box of one of the bigger companies. And that's what drives the index. That's how in the Nasdaq, technology, that's right here, XLK, that was up on the session, but everything else was down, specifically every other sector. And the main one we watch here at TheoTrade is financials, along with technology. Now we have other things that are weaker. The energy sector and utilities were weak as well, but that little green spot right there, and these green names right here, that's what held the market up. So it's not the number of stocks that are up or down on the session that causes the market to go up or down. It's the big names. That's what makes today so unique or special or worth noting or worth doing the video on tonight. And here's why. This is the Nasdaq. If you saw this in total isolation, this is an intraday 5-minute chart, just kind of looking at price itself for a moment, maybe some volume. This thing was up all day. In fact, it was trend day to the upside. That's quantified by higher highs, higher lows, higher highs, higher lows, all the way to the end of the session. And again, the advanced decline line, stocks that are up, stocks that are down, was just about all negative. In fact, here's how to look at the advanced decline line. This is what Don shows us very frequently. This time it's the visualize tab with the index watch, the S&P 500, and we see that an advanced decline line of negative 380, almost negative 400, it means that 442 stocks were negative or declined today, and 62 were positive. But again, as Don reminds us, and I always like to use this term, with financial strong, technology weak, that directly affects the Nasdaq, directly affects the Russell, which is more small cap and financial, but the Dow and the S&P, as Don uses the term, skirts through the middle. So financials were very weak on one hand, technology was strong on the other, and the S&P just goes right through. And that was the exact opposite of what happened yesterday, when financials were strong and the market was very, very bullish, but technology was not there. Now we can turn to some charts. And I think this is remarkable. So the S&P does lag. It is not making new all-time highs. We can also see the financials lag as well. But technology, this is the XLK, is just a little bit beneath that ETF high. And there's reasons for that. But the Nasdaq is at, if we push the Nasdaq here, there we are, all-time highs. And that's been the case since yesterday and I think the day before. So 3 days in a row of the Nasdaq pushing all-time highs. And that actually has resulted in trend days to the upside. And that is a short squeeze or bull-sided domination. And we can look at Netflix. Not quite at the all-time high. These are the top trending stocks in the S&P 100. This is Apple. And we see little arrows there where the market burst. And I like to say there's stops above the market. Those that are short funds and et cetera that are short the market, they have stop losses above the market. And that's in part what gives fuel to this bullish fire. So Apple was a relentless bull candidate today, essentially moving from about 332, closing upwards of 340 per share. Same thing within Facebook, although it's not, well, maybe barely beneath its all-time high. That's about 240 per share. And then Amazon is the other big leader that pierced above the all-time high. You can go back and look at these on weekly charts, but daily just a good enough job of showing these uptrending names getting stronger. And these market cap leaders, some of them are at all-time highs, some of them are just beneath them. But however it plays into the market, especially plays into the technology sector, XLK, and the Nasdaq index, that's enough to push the market up. And the Nasdaq is at all-time highs when the Dow is just beneath. And the financial sector, remember the Russell looks a little bit like the financial sector, XLF, that is not at the all-time highs. So that's where we are. One more quick scan. We can do this on we'll scan that quickly. And this is my new stocks, or stocks making new 52-week highs. It doesn't filter out all-time highs, but just a little glance at the chart shows us that. We look at the sector that they're in, and today it's unanimous. Information, technology, and then consumer discretionary. You might argue that Amazon is a tech stock, but it's more of a retail stock. In fact, it's classified as such. The other stock making all-time highs or new highs today that you might be familiar with is Home Depot. We have Adobe and others that Autodesk. There's Microsoft, ServiceNow, and Apple. And that's the stocks that are up there that are kind of pushing strength. So I won't go through them all. But Home Depot is relentless, and it's a retail company. And again, Microsoft is up there as well. So what does it mean for your portfolio? What does it mean for us on the TheoTrade clientele, and how do we manage these positions? On the bigger picture, we have this breakout, and the market is in this open air, short squeeze, what I call the alternate thesis. The market was supposed to go down. Probability said that. Lower probability called for a breakout, but we got the breakout outcome. And just like a bet, if you place a high probability bet and you win the bet, you get paid reasonably well. But if you place a low probability bet and the low probability bet pays off, it's going to pay, should at least, otherwise why take the risk, should pay out a bigger gain. And that's one way to think about this, that the market was slated, or at least the majority, I think, of the trading community assumed a bearish type of outcome, really against 3,000. But the videos in the past talked about the rubber band effect. The rubber band stays put here, but it can snap. And the make or break point was just above 3,000. So we now have the outcome from prior updates and prior videos that if this market cannot pull back, it will explode to the upside. And that is what we call an outlier. Again, alternate thesis, unexpected move, and bigger outcomes, bigger movements, bigger price expansion or volatility expansion, directional movement plays into that zone. So we're talking about what do we do now? We're not dissimilar to what I keep referring to, at least in the S&P. We'll go back to the SPX and do the daily chart, and we'll sum it up like this. This is not dissimilar to this really August, September, almost October of last year, where the market was overbought, had the gravity point here, had the magnet pull here, had the lower mean of the average here. So short trades were favored until the market broke, traded higher, traded higher, traded higher, and led to some trend days and up sessions repeatedly. So I think that's still where we are. This move of multiple days to the upside is like this, except for one difference. This movement right now is occurring much faster with greater directional movement. It's almost vertical. as opposed to what happened here. As always, be careful and safe. And if you're trading with the low risk probabilities, in-out spreads or verticals may have been losing positions. So that just happens. It's probability. But for intraday traders or short-term traders, this still is a runaway market. And it's not the first time we've seen runaway markets. They are dangerous. They cause stress, right? They sometimes cause confusion. But it's all supply, demand, and price dynamics. So keep that in mind as you're putting trades on and assessing probabilities of a pullback, retracement, or movement down, or continued upside, short squeeze, illogical, irrational type of maneuvers. We don't know the future. All we can do is put positions on, manage the risk, trade small, and of course trade often. It does help to diversify your positions and not to concentrate all your risk within one stock or one sector. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video for June 9th, 2020.